Good day, all. Ira Epstein with your weekend edition of your agriculture wrap-up, and this is for the week ending September 6th, Friday, 2019. And we're right now, we're well after 2 o'clock, so we're in good shape for the settlement prices in the grain markets. And as you can see, all in the red again today. We keep hearing there's going to be talk with Mexico that's favorable. We keep hearing all kinds of talk. But meanwhile, we're at that time of year in grains where you got to remember there's a word that I pay attention to. It's called harvest. The second thing I look at is competition. South America is huge at this point. The third thing I look at in the other part of the ag is where the meats are, and they're under just tremendous pressure. We've lost the barbecue season. We're not getting that monstrous amount of export business. What do you do with everything? So you're going to see that all in a minute. In the currency markets, the dollar's a little bit weaker today. The stock market's up. Metals have been under a massive 2-day correction in silver, with the gold market settling back fairly nice too. It had been up into the 1560s. You're back to the 1513 level. We're looking at the energy markets fairly stable. And this afternoon, we're going to find out if the president can come up with a new plan from the EPA and the Secretary of Agriculture to help farmers out, because they have lost, with all these waivers they've given to some of the refineries, some of the biofuel demand, in fact, quite a bit of it. And the president is more than aware that he's losing farm support because they have taken the brunt of everything. So let's go to the soybean market, and I can show you what I mean. I'm going to start off right here. This was back in 2013, I believe. $17.64 for a bushel. I have it with the decimal wrong. It's 17.64 and a half for a bushel up there of soybeans. As of the close today, we're $8.45. We're over 50% lower in that period of time. There's many reasons for it. It certainly has a lot to do with losing Chinese trade, but I question if GMO isn't a part of this as we get better crops with the same amount of acreage. I think that's part of what we've got, and they certainly have proven that this year is a great example. They can withstand, so far at least, late planting. They can withstand a lot of water in the ground, some dry periods, and yet here you are with prices that in a basically a 6-year period, they've gone down over 50%, and they've been staying down. So it's not a one-year event. When we take a look at a weekly bar chart, you can see how the market is just sort of narrowing in now. It's been playing around for about, month and a half, just in between, we might say, the 870 level and this 840 level, back and forth in here. The pattern of the trade is still bearish, and that's because you have a pattern of lower highs and you've had higher lows. So even though we got a little bump here on this low right there at 839 and a half compared to this low of 837 and a quarter, the legacy is still in place of lower highs. I can argue it's got a higher low, and maybe it stepped out of the downtrend. To prove this one way or the other, to get bullish this chart on a weekly basis, I need to take out 872. If it does that and doesn't take out 839 and a half first, I could argue I'd have higher lows, higher highs. If you take out 839 and a half, you reinstate the legacy you've already had of lower highs, but then you'd have that lower and low pattern. So that's an important number, and I think I'm giving you where I'm seeing the parameters set up right now. When I look at where the resistance comes in, it's pretty clear it's the 18-week moving average of closes right in this number, the red line. We haven't been back up to the 100-week. Frankly, you've got to go all the way back here to last May. So that's quite a long time ago. When we take a look at Bollinger Bands, we haven't hit them either. Now, the purpose of a Bollinger Band, one of the things is the algorithm is designed to keep the market trading within it 95% of the time. And what markets tend to do is follow that. Obviously, 95% they're doing it, only 5% out of it. This market had a big break in May. After that break, we had our rally as we got into all this period. We were wondering, what about the rains and so on? I think you realize that. And we have slid back. Are we going to challenge these old lows that we went down to in the 775 zone? Market would have support if it went down there potentially at the Bollinger Band. Do we get over this 872 level instead of making a break through this and start looking, can we get back up to those numbers at some point, the resistance of the 100-day average and the upper Bollinger Band. At this point, where are we? Well, at this point, the momentum is still pointing down. On the slow stochastics, I don't look to see if it's overbought or oversold. I just look in the direction it's pointing at. The bias is down since price is under the 18-week average, and the trend is down. The bears have control of this market right now. In the meal market, it's the same. You have the pattern of lower highs. The difference here is this market did make it up to the 100-day average, 100-week average of closes, rather, in the upper Bollinger Band. And once it fell back under this 18-week average, it's not looked back north again. It's just been a market that's coming down. Keep in the back of your mind that markets to the upside are led typically in the soy complex by meal. And with this market coming down, it's now doing a function of leading the soy complex to the downside, and it's still looking bearish at this point with lower highs, lower lows. There's not even an argument that that's a lower low than that, and momentum pointing down. To negate the downtrend, I'd need to see prices get over $298.30. That's about $11 away right now. The soy oil's the other part of it. If you're taking the beans down in the meal, while oil can fall, one part of the complex typically gets a bid while the other gets an offer, and the oil's had the bid. So you're still in an uptrend on the weekly charts with a pattern that's been in place of higher lows and higher highs. The neutral zone is the 18-week average of closes. There's a bit of divergence. While you've got these elements bullish, you have momentum that is pointing down. So little caution there. Get under the 2790 level, and this chart will turn bearish. You would then have lower highs, a lower low under that area. You'd be under the 18-week average, and that could put into play that this market wants to catch up or reverse the oil meal spread, but you could put into play the lower Bollinger Band. The key is 2790, and I'm not saying you couldn't go down there and get whipped around, but that would be it on the chart. It would be a fairly clean look. A market that keeps falling apart, and now you understand why the president is meeting with the Secretary of Agriculture and our EPA heads, is look at this corn price. It just keeps tumbling on these poor farmers. And it just keeps wiping this out. You've taken away part of the demand. You know, under Obama, I think we gave away 23 exemptions to refineries in the latter part of his term. President Trump's given away 85. Lower highs, lower lows, still nothing in sight for a support zone. In the wheat, coming down again. You're getting the blow to the grain farmers. I think it's very clear. Resistance up, back up at the 100-week average in the 18. But to get to that resistance, you'd break this chart pattern, which has been in place for quite a while. Actually, you peaked out in the 540s. You're down $1 a bushel. And if the market keeps breaking, I'd be looking for potential support right here into that lower Bollinger Band, which has been climbing, and it's climbing about 7 cents at a shot. So I'm going to say it's probably going to come in probably in the 430s when we reopen on Sunday night, something to watch. The cocoa market. The cocoa market keeps falling, still plenty of supply from the prior parts, but I'm reading about what's going on with the number of diseases that are going on in the cocoa plants, and I'm starting to see this sideways action. You get this root disease, apparently, that you have to get rid of the whole crop and regrow trees and everything that's going to take place, and it's over a large swath of major cocoa areas. We don't hear a lot about it. I happen to read about it today. The pattern is still bearish, but if you were to take out this high of 2238, that would break the bearish pattern that we've had in place. And like I was talking about in beans, I can argue that you've got higher lows and lower highs, that you've gone into a stall pattern. And I'm seeing that stall pattern in slow stochastics. I wonder if this market isn't in the first thralls of bottoming itself out here. If you do try to rally the first resistance, the 100-week average 2284, you would have broken the downtrend. To get there, you might even put into place the 18-week average. A market that's not getting any respite at all is the sugar. It just keeps acting terrible to the downside. Bearish market. It's got resistance at the 18-week average. When it gets to that number, it seems to just completely fail to do anything. In the coffee market, while the daily charts have done a little more friendly action, you're not seeing that yet on the weekly. What we still have here is a pattern of a higher high, then we made a lower low, we had a bounce, and because we had an inside week, you now got two patterns of lower highs with the lower low. So you're back in the bear trend that would be violated if you took out on a weekly chart 94.85. Momentum is still pointing down and bias is down. Does the market have it within it to get under this 8,900 zone again, or is it going to try to rally back over that other number? Going home, I think the bears control. In the cotton market, it was sort of a whipsaw day in the daily charts, yet the weekly charts are just staying bearish. They've got the lower highs, the lower lows. You tried an up, and for the week, you're going to finish off down about 30 cents. Bears still have control of this market until you take out that 60-12 area. You've put into play the possibility of getting to the lower Bollinger Band. Cattle market, need I tell you that we were looking at a market that would the market be able to get up to the 18-week average of closes? Momentum had shifted from bearish, trying to turn up, as you can see here. You still had the pattern in place, and I guess I can point here. Lower highs overall and a lower low. This week, it just completely let go. You can see this is how you look there, and you just gapped, and away you went to the downside. Will the market stay under the lower Bollinger Band? Probably not for a long time. It gets under that from time to time, but it gets back to it quickly as well. In the hog market, you got up to a major resistance area, the 100-week average, and you completely failed at it. So getting down to a Bollinger Band, I always look to see where the major averages are. This one was the first resistance, and for the week, you're down 25 points. You closed the limit down today, though, in the futures. Momentum down, bias down. I don't see anything on this chart yet friendly. So you put it all together and you ask yourself, what do you got? Well, you have a lot of things to be questioning yourself about, and that's how I start you off in the morning. If you're like me, you're always looking, I wish I could talk to somebody or see something that gives me a trade idea. You're guessing about your own trade decisions. I know I do. I know when I get a loss, and I get plenty of them. I'm like Swiss cheese. But you control them. That's the whole thing. Nobody can win every trade. If you think you can, God bless you. It's impossible. So what you're trying to do is fight the algorithms, understand what goes on, where's the market, or you go with the algorithms. When they come in like a day like today, it's fun in certain markets, like if you were watching certain of the metal markets and others, because you saw the algorithms come in. So what I do in the morning is unlike what I do here. I can say buy here, sell there, do this, do that. And I do it in this exact sequence, but I realize, do you want to watch that whole video? Not everybody does. Maybe you're just interested in the energies today. Maybe you're just interested in the grains and the meat markets. Well, if you have your video open, all you're doing is pulling a slider and it lights up and it tells you what section you're in. Plus on the sidebar here, it'll say grains, meats, whatever part of the market you're looking at. So the idea is if you want to watch the whole video, they're typically 15 minutes or longer. That's great. If you want to get just to a section you're looking for, I make that easy as can be as well. These videos are typically out around 6:30, 7 a.m. Central Daylight Time. I will be able at that time to tell you what's going on in Europe, what's going on in Asia, what I'm seeing for the major reports coming out. Let's assume that this the wrap up on the ag. What about the WASDE report coming out? What are the expectations? What are traders looking for? I'm going to review all the current parts with you. How do you get it? It's simple. You go to our website, and you'll be able to register for this under either education or research in the morning subscriber video area. It's a pull-down menu. There is a charge for it, 26.5 cents a day if you haven't tried it. After that, it's $15 for every 30 days. And we also have a 1-year subscription package that you can buy on it for $156. You pay it up front, and you can do that at any time. All this is 30 days at a time. You're not committed to anything. When you take a look up here, You'll see an icon if you're watching me on YouTube. Click it. It'll take you right to the page you need. I'm Ira Epstein. Hope you subscribe. Look forward to seeing you all. For my regular subscribers, I'll see you Sunday night. Video subscribers, first thing Monday morning with your video. Take care.